I told him, like, I don't need any of the deal. All I want is the experience. I just want to get into my first big deal to learn the ropes. And that, I guess, came across good to him, that he was willing to kind of take me under his wing. And yeah, eventually we partnered on this 124 unit.
Welcome to the Apartment Investing Journey, where we explore every facet of multifamily investing and development with top investors, brokers, and service providers who share their strategies, successes, and secrets to help you on your apartment investing journey.
Hey guys, welcome to the Apartment Investing Journey. I'm David Robinson. Our guest on the show today is Levi Allen. Welcome to the show, Levi. Appreciate you coming on.
Thanks, David. Appreciate it.
Yeah, looking forward to our conversation here. A little bit about Levi. He grew up in Eastern Oregon on a potato farm and a cattle ranch, which at this point in time consists of over 14,000 acres owned and operated by the Allen family. Levi has grown a portfolio of multifamily investments worth over $10 million as a full-time investor and agent in northern Utah, with a primary focus on value-add apartment communities. And so I'm excited to dive into your story a little bit. If you can, maybe just back up and tell us a little bit about your story. You grew up on this potato farm and cattle ranch in Eastern Oregon, and take us from there.
Yeah, so my story is definitely different than a lot of people. I grew up around investing, and from the age of 9, we were out, driving tractors. We had to get up before school to move irrigation pipes. So I guess my parents really taught us, a good work ethic, and also just managing a budget. So we had cattle, and they just helped us to learn how to control expenses. And all of that was really helpful from a young age to learn, business. And it helped us also financially be able to build. By the time I was a senior, I had about 60 head of cows that I had built up. And they never really gave us anything, but they showed us kind of the ropes, the basic ropes of investing and how to be successful in life. So I give a lot of my credit to them. But I never really loved farming over the years. It's just a lot of hard work. There's no third-party management companies like there are in some of these other asset classes. And I just started reading books, Rich Dad, Poor Dad, the ABCs of real estate investing. And it really piqued my interest to be able to scale, because you can kind of take yourself out of the business. And I found a 8-unit complex, which we'll probably talk about a little later. It was, mismanaged, mom and pop owner. I was able to get seller financing on it. It was like the perfect first deal for me to get into. Not only was it a good deal, but it helped me from a good small first deal to learn the ropes. And from there, I just started studying markets, and I really loved the Utah market. I had family here, so I decided to move up here with my wife, and then we bought some stuff here, and yeah, just trying to scale from there.
So let me back you up just a little bit. How old were you when you started to think about investing in real estate?
So when I turned 18, I bought a chunk of farmland that I farmed over the years. And really, it wasn't until once I graduated high school, I went to 1 year of college at BYU, Idaho. And then I went on a 2-year mission for my church in Peru. And then when I got back, that's really when my mind kind of opened up to, I want to be financially free. I want to have time, freedom to spend with family, to do what I want, when I want, with who I want. I was about 19. And it took me about 2 years of just studying, listening to podcasts like this, reading every book I could get my hands on real estate investing. And then, that first I was 23 when I bought that 8-unit.
I am curious, in your upbringing, had your family invested in real estate, or were they really focused on farming as their main source of business and livelihood and ultimately financial future, or had they gotten involved in real estate at all?
Yeah, they've definitely got involved. Not so much multifamily, but my dad actually has a really cool story, a lot cooler than mine, just how he got started. One of the farms he bought it for $3 million, $1 million down, and he's made like over a 1,700% return on that one farm, and he's bought several farms similar to that. But yeah, mainly just agricultural farm and ranch land.
Gotcha. Yeah, no, that makes sense. I just wanted to clarify that a little bit. Okay, cool. So you're 18, 19 years old. You start thinking about this, the idea of investing in real estate. You're reading some books, you're listening to podcasts, you go on a 2-year mission, you come home from that, and let's talk about that first deal. So you're spending all this time reading books, listening to podcasts, trying to educate yourself for really 2 years. How did you start taking action once you started to get yourself educated?
Yeah, once I felt educated, kind of just go into the process of looking at deals, trying to get credibility from brokers and making offers and, just underwriting deals. And this deal, my brother actually was talking with the broker about it. He was getting into self-storage. He bought a self-storage facility, and he was kind of just focused on that. So he's the one that kind of showed me it, and I had already known the broker. And we just started underwriting it. And at that time, we weren't super sophisticated on our underwriting, but we were just really conservative on all of our numbers. And it penciled. And I made an offer, and my offer was actually low. There was 2 offers higher than mine. But since we were going to have a third part, that brokerage, they were going to manage it as well. And because of they wanted the seller financing, they felt comfortable that we would have professional third-party management. So we got awarded the deal. I guess just over time, I kind of realized that it was a better deal than originally what I had thought. They hadn't raised rents in like 7 years. I only had 2 tenants actually move out. We had an average rent bump of about 150 across all 8 units. And we only had to turn 2 units where we did some light upgrades. And then, 22 months later, I refinanced out more than all of my down payment. And it's cash flowed great through the hold period. So
that's great. That's a home run on your first deal. Where was the deal located? Was that in Utah or was that in Oregon?
In Oregon. So Baker City, Oregon. So just the small town that I know.
Well, that's great. You found something right in your backyard. Sometimes that's difficult to do. So you get that deal and ends up being a killer deal for you, especially on your first one. What did you learn in that process that maybe you didn't know going into it?
A lot of things. For one, what to look for in a management company. So not that they're a horrible management company, but I've definitely found, there's definitely third-party management companies that do a lot of stuff that, the little ones don't do. Just mainly on the front end, just helping you with your due diligence and your physical inspection, all your due diligence up front, lease audits, which when you get into the bigger complexes, that's a lot more important. I guess you can kind of get away with not so extensive due diligence on the smaller deals. But other than management, just knowing a market. So, I thought this is a great market. It's great. Cash on cash returns are stupid good. But just learning how important a market is for long-term growth, to have that population growth, job growth. Because if you're planning, a 5 or 7 year hold and you're in a really small town, you're more dependent on, fewer employers. So when you have investor money, in your deals, it's a lot more important, the market. So I guess the market is another one that I really...
Knowing what you know now, is that still a deal that you would do? It sounds like based upon the numbers that it ended up being a great deal, but would you do that deal today, knowing what you know now?
Yeah, I'll do it again.
Cool. Anything else in particular any challenges that you faced on that first deal that you took down? Really,
there's not a lot that comes to mind. I've definitely had challenges on a few different deals I've done. But that one, I don't know. I kind of got lucky just having it in my own backyard. So, I was close to the property, for anything that came up, to talk with the management company. Yeah, there's not a whole lot that comes to mind.
How long had you been looking for deals before that one came across your plate?
Let's see. I closed on that in July of 2017. So about a year. I'd been looking pretty hard.
And describe for me, because a lot of people think, I'm going to start looking for deals and, I'm going to, talk to a few brokers here and there and maybe go walk one property or underwrite one deal a month. Like, talk to us about describe for me what that means to you when you say, yeah, I've been looking for about a year.
Some markets are really competitive, and trying to just get credibility with the brokers, they want to know that you have the capacity, that you either have the money or you can raise the money. You have the capacity to come up with the equity. They want to know you can get qualified for the debt. So who are your key principals on the loan to qualify for net worth and liquidity requirements? And then who is the management company? That you basically have to paint a picture to the broker all the way to closing that you can get the deal done, because they don't get paid till the deal closes. So trying to paint that picture to a broker when you've never done a deal can be really challenging.
How important was getting that first deal under your belt moving forward in future discussions with brokers and your credibility moving forward?
Yeah, so everyone hears a lot about the law of the first deal. And even though it was a small deal, it's only an 8 unit. It's, a multifamily deal, multifamily financing. It's all underwriting is the same. So it was definitely helpful to be able to relate to a deal you've already done successfully and explain the process of doing, each thing. It's definitely helpful.
Okay, cool. So you knocked down this first deal. Where did things go from there? So you took down the 8 unit, roughly 2 years ago now, right?
Yeah.
Okay, and good for you. So you just refinanced recently then.
Yep.
Pulled virtually all your money back out of that deal, and now you're rolling that into another. We're going to talk about this 124 unit. Is there anything in between that you did after you closed on the 8 unit?
Yeah. So, I dabbled in the residential split space. I flipped a house. I soonly figured out that I didn't want to go that route. Just a lot of work, a lot of overhead, more risk, less profit. So yeah, I just focused on multifamily. Just started talking to people in the space, and I found a 10 unit here in Utah by Weber State, and it penciled. It was actually on the MLS, but it was like the first day it hit the MLS, and I made an offer, and I ended up getting it. And that has been a really good deal. I'm actually going to be refinancing that one later this year, and I should be getting close to all my money out of that one as well. But yeah, just getting into this larger stuff, there's, the brokers are more sophisticated. The sellers are really more sophisticated. So not only trying to show that you're credible to the brokers, but to the sellers, because they're betting, all the buyers that are coming to them, they want to know you can take it down. So really just being educated and being able to explain your business plan, how you're going to execute it is really helpful.
Cool. So you closed on your 8 unit in basically your hometown. You mentioned that you and your wife moved here to Utah because you liked the Utah market. What was it about the Utah market? Or you did mention that you have family here too. So what was it that brought you here to Utah?
So a few things. Apart from the family, just the economy here. Not only, are we top in the nation in net migration, population growth, job growth. And yeah, I just seen that we've had tremendous rent growth and price appreciation. There's a huge housing shortage. And also we got, mountains on one side, water on the other side. So there's a very limited supply of land. So, that really comes into play for rent growth. It's just a supply and demand, balance between that. So
when you moved here to Utah, have you been investing full time? Is that your main source of income, or do you have another job? How are you generating income for yourself outside of your investments?
Yeah, so I'm an agent as well. I went ahead and got my license. Like a lot of people, you kind of think you need a license when even if you're gonna invest, which is completely false. But it did help me a little bit, just not only committing to learning the market better, but just getting out and meeting more people because you're trying to get listings. So yeah, I'm an agent as well, but I'm more focused on the investment side and specifically multifamily. I'm also looking at other markets apart from Utah.
Yeah, that's great. So if you were to say how you divide up your time, how much time would you say you devote to real estate sales versus real estate investing?
Probably 95% on investment.
Okay, cool. So if a deal, if a sales deal like a listing or a buy or a sell falls into your lap from a real estate agent or broker perspective, you'll handle it, but your main focus is on the investing side.
Correct. Yep.
Good for you. Cool. So all right, so you move here to Utah, you find a 10 unit, and you close on that. I assume that you've continued to try to find deals here in Utah, but you also mentioned that you're exploring out of state. Talk to us a little bit about that.
So Utah doesn't have a whole lot of apartments. We're really driven, with single family homes here in this market, and there's just not a lot of stuff that sells. It's pretty much the whole West. The mentality of a lot of investors in the West is buy and hold. Just 2 weeks ago, I was in the Tri-Cities market in Washington, and I was driving around with the top broker. He knows literally every owner there. He sold 80% of inventory in that market. He's with CBRE, and he's just like, yeah, they're a buyer. They're not a seller. I don't know what it is about the West, but they kind of have that mentality. In the South and the East, they're thinking, buy it, fix 1031 and leverage up and just keep doing it. Something about the West, they kind of have that mentality. I've heard that from a lot of brokers. But yeah, there's just not a lot of deal flow. I am working on a couple of deals here in Utah right now, but yeah, just a lot less deal flow. So I've kind of branched out and just looked for other markets that I'm attracted to. San Antonio being one, that's the 124 unit. Boise, Idaho, Tri-Cities, Washington, St. George, Utah. So yeah.
So maybe walk us forward. You're a young guy. You've accomplished quite a bit in a very short period of time. You closed on your first deal 2 years ago. And how many other acquisitions have you had thus far since that first one?
So of multifamily, just the three,
10 unit,
the 8 unit, the 10 unit, the 124 unit.
Okay, perfect. Well, let's dive into the 124 units. So this is a big jump, right? You went from 8, then you got the 10 under your belt, and now you made a big jump to 124 units. Maybe walk us through the process that you went through to identify the market, source the deal, and well, let's start there. How did you identify the market and how did you source the deal?
Yeah, so everyone always hears about Texas being great. So I, studied all of Texas and all the different markets. And, I've just seen Dallas, how hot it is right now. They've had a ton of cap rate compression, and it's still a good market, but there's definitely less yield. Same thing with Austin. It's in the tech there, it's booming, but yeah, there's definitely a lower yield. And then Houston, just with all the hurricane stuff all the stuff going on there, I just decided to not really dive into that. But yeah, San Antonio, it met all of my criteria, positive net migration, population growth, job growth, and they had a higher yield as well. So yeah, I just started diving into that market and talking to brokers there. I looked at a few different deals. Kind of what I like to do when I'm diving into a new market is talking with the junior brokers, because they have less of a buyer's list built up, and because they have access to all the off-market deals that the senior brokers in their office have as well. So I started talking with one broker, and it was another broker in his office that had the off-market deal, and I start underwriting it, and it almost penciled at what they wanted, and I submitted an LOI for, it was about 400,000 less. They were asking 8.3 million, and I submitted my LOI for 7,814, 63,000 a unit. And like, they were surprisingly, they're like, yeah, this is like pretty reasonable. It's a strong offer. there were two other guys that I know I was bidding against. One had a higher offer that I know of for sure. And I got down to best and final, and I was like, holy crap, like, this is the real deal. Like, now what? How am I going to raise money? That's when I decided to find, a good co-sponsor in that market. And I did some research. I found Devin Elder. He had about 1,000 units in this submarket, close to north central San Antonio. Reached out to him and we really clicked. He was down to partner. We went over the deal together on the underwriting. It made sense. We ended up getting it for 7,875. So just a little bit more than what my original LOI was. And yeah, so he's been great helping me, put everything together, put the private placement memorandum together, getting the money raised. We got a good management company in place.
Well, that's great. Let me back you up just a little bit to having conversations with brokers. How long was it from the time that you started researching the San Antonio market and felt like, okay, this is a market that I'm interested in, it meets my criteria, to starting to have conversations with brokers before this deal was put in front of you?
A little over a year. So my brother and I actually flew out to Memphis, Tennessee. We have a good friend that's got a 94 unit there. He's an owner in a management company, Home River Group. They've got like 15,000 units that they manage. And we were just looking in that market. And then we drove down like through Little Rock area. We drove to Oklahoma City. We looked at that market. So we had looked at several markets, my brother and I both, meeting with brokers. And yeah, so it was about a year until I went under contract on this deal in San Antonio. But I'd had my eye on it for 6 months that I was really looking into that market.
And how many deals would you say you underwrote during that 6 month period before you saw this one come across your plate?
Yeah, so it depends on what you classify as underwriting. So quick and dirty, hundreds of deals.
Okay.
Almost every day I'm looking at a deal, whether it's marketed or off market, just kind of doing a quick underwriting. But where I'm actually diving into the T12, the rent rolls, and thorough underwriting, at least 50 to 100, I'd say.
Cool. And then how many LOIs had you submitted? Was this the only property that you submitted an LOI on, or had you submitted on others?
Yeah, I'd submitted on others. Not tons, like 10 or 15, probably. A good amount.
Great. Yeah, that seems to be sort of the numbers that a lot of investors are experiencing, right? Hundreds of quick and dirty underwriting, just checking the big boxes to see if it fits, and then getting into roughly 100 where you're really underwriting to find those few deals that are worth submitting an LOI on. So that's it seems like that falls in line with what a lot of other investors are experiencing. So you do all the groundwork. You spend a year researching a bunch of different markets. Then you hone in on San Antonio for about 6 months. You start having discussions with brokers. You're underwriting, deep underwriting on roughly 100 deals to find those few that you submit LOIs on. And then you finally get this one under contract and you're like, holy cow, now what? I've got this deal. I've got this fish. I've got to figure out how to take it down. So talk to me about that process. So you hadn't started raising money. You hadn't raised money before you got the deal under contract. Walk me through your thought process.
So I'd raised just a little bit, just like on the house flip, just a little bit. But yeah, it was a completely different animal. So it was definitely helpful having Devin kind of mentor me, and mainly just from a limiting belief perspective. Because I'd heard this so many times. People do this. This is what you got to do. I knew exactly what I needed to do, how to do it, who to talk to. But just mentally to process like that we can get it done. It was really helpful having him on my side. And I ended up raising a good amount as well. And he raised the majority of it. We had one other co-sponsor raise a little bit as well. But yeah, this deal was really interesting because I know I'm kind of going off topic.
No,
But
you're fine. You're fine. Let me ask you a follow-up question on your relationship with Devin. How did that come about? What was your process in identifying him as a potential co-sponsor, and how did you reach out to him, and how did you ultimately partner up with him on this deal?
yeah, so I had actually talked to him about an 80 unit that I was working on. I'd made an LOI on it in San Antonio, talking to him about it. I told him, I've got the money to put down the earnest money. I can help raise some of the money. I've got, I know some high net worth individuals that could sign as key principals on the loan. Just try and think of anything I could do to add value to him to make him want to partner with me. And yeah, that came across. And I told him, like, I don't need any of the deal. All I want is the experience. I just want to get into my first big deal to learn the ropes. And that, I guess, came across good to him, that he was willing to kind of take me under his wing. And yeah, eventually we partnered on this 124 unit. So
that's great. So on the 124, take us forward. So you submit the LOI, you get it under contract, and you convince Devin to partner up with you. Are you able to share with us sort of how you structured the deal with your partners?
Yeah, so we did a 75-25 split, an 8% preferred return. So anything above 8%, it's split 75-25. We did a 1.75 acquisition fee, which is 1 to 2% is pretty common. 1.5% asset management fee. Yeah, so that's how that was structured.
So, I'm sorry, I don't think we talked about the property itself. It was North Central San Antonio, 124 units, but give us a little bit more background on the property itself.
Yeah, so like a Class C plus property in a B minus area. It's a good area, and that's one of the biggest opportunities we saw is at the time. Let's see. Back, because they had horrible management for years, and then they got a good management company in place in November of 2018. So the property was slowly trending upward as we were negotiating on it. It was 75% occupancy. Did I say that in November of 2018? By the time we went under contract, it was 92% occupancy. By the time we closed, it was 96% occupancy, and they were leasing the one bedrooms so average rents were about 92 cents a square foot across the board. And by the time we closed on it, we were leasing the one bedrooms at $1.13 and the two bedrooms at 98 cents a square foot. So that's like $70 and $80 higher rents just once we closed on the property. So we got somewhat lucky that, it was slowly trending upward with really a good property management company until the time we closed.
Yeah, that's interesting how big of an impact the property management company was able to have in a short period of time. And your timing was impeccable, getting it under contract when it was on moving up. Had you underwrote the deal based on the 75% occupancy?
So yeah, we looked at what it was that because really when we were negotiating on it, it was like high 80s when we first started kind of looking into it. And based off a T12, yeah, it was like a high 4 cap. It didn't make sense, but I'm looking at I don't even know the market super well as Devin, and I'm seeing the expenses are like $8,000 a unit per year, which it's just completely mismanaged. And I see this opportunity, and the rents are low, looking at comps. So really, once we started diving into the numbers, we saw that there was, a big, based off the trailing numbers, it wasn't a home run, but looking at what we could do with it, it really made a lot of sense.
Gotcha. Okay. And then what was the business plan? Obviously, just getting the property management company in place had a big impact. What was the business plan on this deal?
So there's about 100 units that had not, about 10 to 15% of the units had a light upgrade already been done. So we were just going to plan on upgrading the remaining units, getting about $100 to $120 bump on those units. And, luckily we've been getting, close to that just least, without even doing anything as it was trending upward. But yeah, that's the business model, is just to continue to upgrade units. We're putting about 3,500 to 4,000 a unit into the units moving forward. And we did a bridge loan, a non-recourse bridge loan going in. And our plan is sometime in year 2 to refinance into a Fannie Mae loan. And we should be able to get a good chunk of all the investors' money back. And then given that it's in a good location, we'll probably hold it for a good few years once we refi.
Good for you. Can you walk us through the bridge loan process a little bit? Maybe give us the basics of how that broke down and how a bridge loan works when you're doing a value add deal.
Yeah. So bridge loans, the nice thing is there's very small, if not any, exit fee. So when you're going on your exit to refinance, that's kind of the reason you do a bridge loan. And a lot of times they're recourse. So it was nice that we were able to get a non-recourse bridge loan. We got a 3-year term with a 2-year extension at I think it was a 5.76 interest rate. But the nice thing is we're committed to 12 months of interest only payments. And then there's no exit fee. So we're just committed to pay the first 12 months. And then anytime after that, we can refi with no prepayment penalty. So for a value add deal where you're trying to, refinance in a short period of time, there's not really a better loan product than this.
Yeah. So when do you expect you're going to be able to refi?
So, when you're talking with investors, you always want to say a little bit longer than what you really think it'll be. We're thinking in about a year, about 12 to 18 months, probably no longer than 18 months. But yeah, we just, when we're pitching investors, we just say sometime in year 2, but things are going well. We're renovating about 7 units a month. So yeah, we're shooting for, 12 to 18 months.
Cool. Good for you. Well, man, I've appreciated your time, and it's been a great conversation. I'm impressed with what you've done in such a short time, and sharing a little bit about your story. And obviously, you have a bright future ahead of you as far as investing is concerned. I want to start winding down here a little bit. I've got 3 questions that I want to ask you. I just want to get your knee-jerk gut reaction to. You okay with that?
Yeah.
All right. What's the biggest mistake you've made so far on your apartment investing journey?
I would say being afraid of partnerships. So you always hear bad stories about partnerships, going south. But if you're vetting your partners thoroughly, they can be great because every person has their own unique abilities and skill sets. But through partnerships, you can accomplish so much more. So I guess just getting over that fear of having a bad partnership, just to do your due diligence on a good partner early on. I guess that's what I would say, is just not being afraid to partner sooner.
Appreciate it. All right. What's the biggest win you've had on your apartment investing journey so far?
I'd have to say my first deal, just the 8-unit deal, because like you said, having it give you that confidence moving forward and making some money and learning, the law of the first deal, it really helps you move forward. So that's what I have to say.
What's the best advice you have for someone who's just starting their apartment investing journey?
I guess just trying to figure out what your unique abilities and skill sets are, and then finding someone that's doing what you want to do, and then figuring out how could you add value to them with your skill sets. Even if it's getting in, a deal with no profit, just getting in to get in and to learn, and having your name, as a key principal on the loan, finding out what it is that you're good at, that you could add value to someone else.
Well, look, Levi, I appreciate your time. This has been a great story, and I'm excited to have you come on again down the road and tell us more about what you have going on in the future with future deals. But how can listeners connect with you if they want to reach out and just learn a little bit more about what you got going on and maybe connect with you?
Yeah, so my email is levi@wealthcreationmgmt.com, or Facebook, LinkedIn, Instagram. Just look me up.
Great. Yeah, we'll put your contact info in the show notes so everybody has that. Again, thank you for your time. Thanks for sharing your story, and look forward to connecting with you again soon.
Thanks. Have a good one.
Hey guys, thanks for listening in today. Hope you enjoyed the episode. Please hit that subscribe button or leave us a quick review. Also, don't hesitate to reach out to us on Instagram, Facebook, or at apartmentinvestingjourney.com. See you next week.